Silvergate Capital announced that it would wind down operations and liquidate its bank. Signature and Silicon Valley Bank were seized by federal regulators, marking the second largest bank failure since the Great Recession. The credit rating firm Moody's Investors Services downgraded the entire U.S. banking sector and warned about the future need to downgrade 6 more American banks. Credit Suisse, the Swiss banking giant, acknowledged it has found material weaknesses in its financial reporting. Its largest investor has signaled it would not be rushing forward with an infusion of cash to support the banking giant. It's time we face the possibility that the banking system could completely collapse globally because these are not isolated failings. Banks are intrinsically tied to one another. They buy each other's loans, invest in each other, they hold accounts with each other, and partner in all aspects of our financial system, often co-holding loans for businesses and property worldwide. So what would it look like if the banking system collapses? This is what you need to know. Can it be contained? The first effort by investors, bankers, financial institutions, Federal Reserves, and governments worldwide aims to contain the spread and calm the people. If people panic and start withdrawing their money to safely store it under their mattresses, that paper currency, it doesn't exist. The dollar you might have deposited in one bank is leveraged or loaned to another, which then lend it out to yet another, which then use it as collateral for more than one loan. It's spread all over the place and takes on many forms far greater than the sum total of its value. In the case of Silicon Valley Bank, the Fed rushed in to assure that all depositors would be made whole, a term to mean that depositors would receive all their deposited money back. Investors in the bank stocks were wiped out, as they took a knowing risk by buying the stock. Some of these investors are not just individuals. They're financial institutions that hold and manage portfolios of pension plans, 401ks, IRAs, mutual funds, and other retirement accounts. Anyone invested in an index fund may hold Silicon Valley Bank to a small degree. Top shareholders in Silicon Valley Bank include Vanguard, 11%, and BlackRock, 8%, in their various index funds and ETFs. Other money managers and pension funds with exposure include State Street Global Advisors, JP Morgan, and Invesco. Swedish pension fund Alecta held 4.45% of total outstanding shares, or about 600 million at year-end. Many will check their balances in their retirement accounts in the coming weeks only to find out that their balances have considerably dropped. Other banks and investment firms will fail, so can it be contained? At least some banks will profit to the tune of 100 million or more, having banked on Silicon Valley Bank's demise, but let's assume for a moment that the spread of the failures cannot be contained. What's next? How it all fails. First, I mentioned people's retirement accounts take a significant hit. The average 401k balance was $141,000 in 2021, up 10% from 2020. And that's not much to retire on to begin with, and it's even less when you factor in inflation and the rest of a person's golden years. If a person just lives 10 years beyond the retirement age of 65, they'll have a little less than $1,200 a month to make ends meet. With a significant drop in the retirement portfolio, dreams of golden years and not commuting and grinding out work daily are put on hold. People will have to work longer and hope economic conditions improve. Unfortunately, bank failings of this level cause some companies to be unable to make payroll, invest in new projects to maintain growth acceleration, or force companies to abandon projects that they've been working on to sustain growth and revenue. That means they often seek to downsize their labor force. Older workers are often the first to be let go because younger workers can be forced to work harder for less pay. However, younger workers are reluctant to enter a workforce where they know they'll struggle even to keep their heads above water. Any failing pension plans get transferred to the Pension Benefit Guaranty Corporation, or PBGC, a United States federally chartered corporation created by the Employment Retirement Income Security Act of 1974. These downsized workers enter unemployment status and collect unemployment insurance. These holders have failed equities, write off their losses on their corporate and individual taxes to offset their gains. All of it gets transferred to the balance sheets of the government, and still, not one profit-seeking, risk-taking banker ever spends a day in court or jail. All of these result in massive pressures on the government, which is actively involved in trying to contain inflation, spending to encourage economic growth, and loaning money to banks to promote their growth. The pressure is enough to erode global confidence in the almighty dollar. Countries begin to seek transaction in other currencies or securities, even as they struggle to limit their exposure to failing banks. After all, these bank failings are not a uniquely American problem. They have branches and roots in financial institutions worldwide, and several other countries are already reeling from these implosions. Value everywhere is evaporating. Before everything is said and done, Several more banks will fail or shed significant chunks of their value. Some countries may suffer a recession or a depression, even if it doesn't get that extreme. One thing is for sure, the global economy freezes up as people assess their losses and hold on to whatever resources they have left. Download the Prepper's Recession-Proof Economic Collapse Guide today. I'll post a link in the description and comments section below, or visit cityprepping.com/moneyprep for a free guide to help you start recession-proofing your life and emerging even stronger when the economy recovers. What could be next? With financial strains on countries so great, either the war in Ukraine loses support, because why would countries send money and resources there that are needed at home, or it escalates. A significant escalation puts countries in a wartime posture, and there is lots of money to be made and jobs to be had in the defense industry. Any cursory history study will reveal how previous world wars spurned economic growth, innovation, and a post-war explosion of growth. In some ways, wars are a great big reset and reboot button for the victorious countries. Most manufacturing, however, will likely slow to a crawl. With the dollar buying less, companies produce less. Even farmers are reluctant to gamble on the high price of seed or feed that they cannot cultivate into a profit later. They too will seek subsidies and assistance from the government even as they produce less food. At home, even if you manage not to be part of the ranks of the unemployed and you manage to not lose your shirt in your retirement portfolio, or your bank didn't fail and lock up or lose your life savings, you will suffer the consequence. Your dollar will be worth less or worthless. Banks and financial institutions will pass on their losses to you through higher fees and tighter credit requirements. If you have any form of variable rate loan, that is a loan with a floating interest rate, expect the interest rates to go up. Now, even if you don't have any personal exposure, the company or business you work for might. Their ability to transact or secure the resources and revenue they need to operate can cease to exist. That could force you out of a job. In this climate of decline, you can expect inflation to soar to all new heights. Your dollar buys less and the cost of everything skyrockets. Suddenly, you can't get the same amount of food at the grocery store. You can't afford the gas you need to commute or the luxury expense of childcare while you work. You're not going to be able to put these things on credit and hope for a better day either, because banks will be tightening credit limits and raising the annual percentage rates in the hope of maintaining operations. You or your neighbor is left unable to afford basic necessities, pay rent or a mortgage, or sell assets because who is buying in this climate? The wave of repossessions and foreclosures inevitably follows. The whole world transacts in the US dollar, and when it fails, it's catastrophic for the world. Some governments will fail as citizens press their governments for solutions or help. Some will restructure away from capitalist ideas. Everywhere and all at once, production seizes up and trade routes slow or stop. If you're a municipality dependent upon parts like wires, transformers, pumps, and more from China to keep its water or power plants operational, those parts are no longer available. Failure to maintain these systems can result in them failing from lack of maintenance or push into failure from natural disasters or strain. What can you do? Now, I know this isn't a pretty picture that I just painted. I'm trying to show you how bad this can get if it's not contained. And as bad as this all is, I still haven't really scratched the surface. The Great Depression, after all, had some pretty fundamental causes behind it. And that was at a time when global economies and banking systems weren't nearly as intricately webbed together as they are today. That was a time when people locally source their resources because these massive supply lines that bring you asparagus from Chile and aluminum from China, they didn't exist back then. First, you must accept that you won't be able to buy your way out of this crisis regardless of what you have saved or set aside. Liquidating your 401k to live off of it for as long as possible will not work. You have to turn to locally sourcing what you need to survive. You're going to need to learn to live on less with forced frugality. And at some point, you're going to be responsible for your own food, water, and whatever energy that you need. You may need to postpone treatment for any medical conditions that arise if this situation spirals out. You will need to become as independent and self-sufficient as possible. And for years, people assumed that they would just transact in gold, silver, or platinum if the dollar ever failed. And for years, I've been telling people how wrong that thinking really is. It assumes that other economies won't be affected. It assumes you can somehow trade an ounce of metal for a loaf of bread. But the dollar and precious metals only have perceived value. You're not going to be able to live off either of them in a more significant collapse. What will be of real value are your skills, your resources, your knowledge, and self-sufficiency. And you might be able to trade that one silver Morgan dollar that you've saved up at this time for a basket of apples.
In today's money, you just traded about $100 for a basket of apples. You would have been far better off having planted an apple tree that would have provided you with multiple baskets of apples now. And just to be clear, I'm not going on record predicting a global collapse and the death of the US dollar, but I'm also not ruling out some very challenging times ahead of us either. Either governments and financial institutions are going to be able to contain these losses, or they're not. When facing that reality, you can either sit on the sidelines with a wait-and-see mentality and be a victim of whatever fate befalls you, or you can begin to actively take control of your life through preparing. You're going to be better positioned to survive the fallout if they don't contain it. Now, if they do contain it, you're going to be in a more solid and better position because of your preparedness activities. Now, look, I'm not a financial expert and I don't give financial advice, but I don't have to be to see how badly this could swiftly turn. And the key word there is could. One of the ways that you can insulate yourself is by educating yourself on this channel. I have a free recession-proof guide that you can download, and I'll put a link to it in the description and comment section below. And you can really get yourself on a path to reduce expenses, become more frugal, and to understand what you really need to survive. The free videos on this channel can also equip you with what you need to know to survive a catastrophic economic decline. Now, the Great Depression playlist, for instance, that I have here on the channel, it's got a dozen videos on everything from what you'll need to how-to books to how to barter after an economic collapse. I would encourage you to check that out, and also, again, I'll put links to that in the description and comment section below. So here's my final encouragement. Let's hope for the best, but prepare for the worst. Don't assume it's gone for good if this crisis is contained and averted. We have seen these type of situations occur again and again. They come back every few years or decades, and each new occurrence is worse than the one before. It's not a matter of if it will occur, it's a matter of when. So please take my advice and commit to your current efforts to prepare or begin preparing now while there's still this time. As always, stay safe out there.